Well, it was a mixed bag on Wall Street today. On the one hand, we had the NASDAQ hit all-time highs, largely based off of the strength in Facebook and other technology-oriented companies. But on the other hand, we had the Dow Jones really struggling today based off of a pretty lousy earnings report from 3M and some other industrials companies out there. Generally speaking, the postures remain bullish from an intermediate term perspective. We do have, of course, a lot of other earnings announcements coming out. In fact, we've got Amazon, Intel, and Starbucks all coming out here tonight, so we'll take a look at that. And then we'll look at a sold put opportunity in a sold off stock in our trade application example today. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's April 25th, 2019. First of all, if you're new, welcome aboard. Go to our YouTube channel, click subscribe, then go to our description area and sign up for our email distribution list as well. We're also on Twitter. Be sure you're following me. My handle is @BrandonVanZ, and we'd encourage you to click like and retweet anytime you see these Market Outlook related posts out there. Lastly, we do have a presence on Facebook. Feel free to join our group at the web address embedded in the logo in front of you. All right, let's go ahead and dive into the charts now. And as you can see, I've got chart 4B pulled up here in front of us. This is just going to be the 4 grid that will show us 4 major U.S. equity indices here. And these are 3 months in length that we're looking at on each of the 4 charts. Each one of the candles is 1 day in length. Now, the background colors of these charts will help you understand whether we have a bullish posture or a bearish posture from an intermediate term perspective here using the market forecast technical indicator. As a reminder, the market forecast technical indicator is proprietary to TD Ameritrade, and so you can find it over on their resources along with the Thinkorswim platform that they operate there. But you can see we've got the market forecast indicator pulled up down below all 4 of our charts here. And one thing that I'll point out is that when you do have green background charts like we do in all 4 of our cases right now, that does mean that we have a bullish posture, again, according to that market forecast intermediate line. Now, a couple different ways you can get a bullish posture with that green intermediate line that you see down below there. One of the ways is simply being in the upper reversal zone, and you'll notice that in all 4 of our charts cases, that indeed is the case here currently. All 4 of the charts have intermediate line above 80. That's the upper reversal zone for the market forecast indicator. You could also have a bullish posture if that green line was just merely going up between 20 and 80, kind of like you saw with the Russell 2000 down here in April as just one example. So that's the good news, at least for those of you that want to maintain your bullishness. At this point, we continue to have a bullish posture. Now, obviously, that's not going to last forever. Postures change fairly regularly. As you can see, even on these charts we have in front of us, there were times in the most recent set of 3 months that we've had some disturbances where we've had minor bearish postures for a brief moment in time. So we always know we're never going to be able to time it perfectly on the top or the bottom, but we're trying to be more right more often than wrong. And as you can see here, generally speaking, if you had been bullish during the life of the 3 months that these charts represent, you're probably doing reasonably well for yourself. And that is continually the case at this point. Now, obviously, from a seasonality perspective, there will be the old rallying cry at some point here in the next month or so of sell in May and go away. Keep in mind that does not always work. It is true that for the last several decades, more often than not, you see weakness seasonally between May and October, but as a reminder, it does not happen every single calendar year, so that should not be your reason to just instantly get out of the market. Ideally, you're going to be able to find technical broken support areas or other indications, technically speaking, on the charts that can help guide you in those decisions. So right now, while we're at a high level in the market, it doesn't necessarily mean that just because May is on the horizon, we've got to sell everything and then come back to the markets in November. But it's going to be an interesting summer, especially with high-profile companies like Uber that are going to be IPOing a little bit later this year. I would think that the markets are going to try to stay elevated as a result of some of those high-profile IPOs. And perhaps after they're all launched, maybe we'll have a little bit of weakness there. But right now, path of least resistance continues to be the upside. You'll notice that the 30-day moving averages on these charts are all tilted higher, and they're all colored green right now, meaning that price is above the rising moving averages. Now notice that the Russell 2000 is probably the weakest link out of our four that we're looking at this moment in time. And of course, again, that changes. That's why we do these videos every day. If nothing ever changed, we wouldn't need to do the videos. And so that can change, but as of this moment in time, it does appear that the Russell 2000 is continuing to be the weak link of these group of four indices out here. Note that the Russell 2000 was down 0.79% today, and was down even more than the Dow Jones. The Dow Jones actually got kind of more press for being down today, simply because of the aforementioned 3M report. But it was actually the Russell 2000 that did worse than the Dow Jones here today, and it is the one that has kind of the flattest moving average here as well. You'll notice that the upward ascent of the moving averages on the other three charts are a little bit more obvious, telling us that the trends are a little bit more significant in those other areas. But just to wrap things up, the S&P 500 was basically flat today. It was technically down 0.04%. The Dow Jones was a more legitimate down day due to 3M, so it was down 0.51% today. The NASDAQ ended up closing higher by 0.21% today, and they did hit an intraday all-time high. We didn't quite hit a closing all-time high, but an intraday all-time high today for the NASDAQ. In fact, remember that when we do have a yearly high, this new label will appear in the charts themselves. So you can see right here it's showing up. It says yearly high today, whereas the other charts do not feature that label because those other charts did not hit a new high today. And then, as I mentioned before, Russell 2000 was down 0.79%. We got awfully close to getting some bullish intermediate confirmation signals. We got really close on both the NASDAQ and the Russell 2000, but you will notice that the momentum line in the Russell's case ended up at 25, and in the NASDAQ's case at 23. So since both of them were still above 20, that nullifies that potential signal that might have occurred. So, if we do get another sell-off day tomorrow, perhaps we will be looking at a couple of the indices with bullish intermediate confirmation signal setups. I did want to check in on some of those after-hours movers here today, since again we're in the heart of earnings season. Amazon, of course, is kind of the big kahuna, one of the largest companies on the planet. Of course, today Microsoft went up dramatically and became the third company to ever hit $1 trillion market cap, but Amazon was one of those other three companies that did it once upon a time. You can see that Amazon did report their earnings after hours here today, and it's been a little bit chaotic. You'll notice that Amazon did close the session at 1902. And if I kind of zoom into the after hours activity that we've seen, now that they've reported their earnings, you can see that the stock was up about $70 per share at its high, all the way up to $19.70. Then it did pull back immediately after that candle. At one point, it actually was in the red a little bit in after hours, but now has then been rallying back again as it stands right now, and we're only 21 minutes after the bell. So this could easily change by the time you're watching the video or by tomorrow morning, but right now it's at $19.33. So it's up about $30 per share after hours. All else being equal, that's a positive sign for the market and for those of you that have a more bullish posture right now. On the other hand, Intel, the last I checked, was down pretty substantially. Let's check it now. It still is down pretty substantially. So notice that Intel, after having a tremendous rally earlier this year, is now selling off after hours after they've reported their earnings. Of course, a very influential company in its own right, not quite as big from a market cap perspective as Amazon, but when you think of the semiconductor industry, Intel is kind of still known as the bellwether there. And so you can see that Intel closed the session today, the normal session, at $57.61. You can see it's trading right now at about $54. So looks like it's sold off about $3.50 or thereabouts at this point in after hours activity. So that might put a little bit of a wet blanket on some of those tech rallies that we've seen lately. But again, you have to kind of weigh the positive response to the Amazon earnings versus the negative response to the Intel earnings. And then I also wanted to take a look at Starbucks. SBUX is the ticker symbol there. And Starbucks is trading up slightly after hours. Remember, this one actually affects us a little bit more. We've had an ongoing Starbucks trade in this particular portfolio for these market outlook videos for quite some time. In fact, the long calls I originally bought were last summer, and we've since rolled them a few times along the way. So we are kind of cheerleading Starbucks on. At some point, it'll fail to continue its uptrend, but it has been one heck of a run in the last year. And for those of you that have been taking advantage of it with long calls, you should have benefited from that. But right now, you will see that Starbucks closed the normal session at 77.11, which was actually a new all-time high that they set today. And after hours, you'll notice here that Starbucks is now trading at 78.55, so up maybe about $1.50 or so. So not a huge response from the marketplace, but nonetheless, considering the impressive rally that Starbucks has been in for the last year, even having a little bit of a boost after hours is kind of nice to see in that particular case. So we'll see if that changes by tomorrow with Starbucks, Intel, or Amazon, because again, we're within the first half an hour after the market close as I'm recording this right now, but that gives you at least a sense of how things might be setting up for tomorrow morning. All right, let's get back on track with some of our charting analysis. Let's go over here now to the 3 green arrows setup. This will be chart 4C. And as it stands right now, we do have something to report, a couple of things that are new to report here. Maybe a little bit of wear and tear on the markets here recently, because we now have a red arrow creeping in on the S&P 500 on the MACD, and we also have a red arrow on the Dow Jones on the MACD that crept in today. So that was different than what we saw yesterday. In fact, we could say the same thing for the Russell 2000. So 3 out of our 4 charts actually picked up a red arrow overnight due to today's little bit of a pullback in some of those indices. The one index that did not finish in the red today was the NASDAQ. As I mentioned before, it was up 0.21% today. So it does retain its 3 green arrows right now. So as of this moment in time, NASDAQ is the only one that has 3 green arrows. And so if you are looking for bullish trend trades, if you take the mindset that an object in motion tends to stay in motion, then those technology-oriented companies like your Amazons and even your Starbucks are part of the NASDAQ composite. So some of those might be useful to look at if you're looking for trend trading setups. Let's take a look now at our 1040 crossover method. Not going to spend a lot of time on this because this does not change often, but just a reminder that where things stand right now from this longer term posture setting mechanism of the 1040 crossover, and that's the 10-week versus the 40-week moving averages that we're looking at there, we do have bullish crossovers continuing to exist for all 4 of our charts right now. Of course, the Russell 2000 was the one that crossed over most recently, and therefore is considered the laggard of the group. The other 3, we've been dealing with bullish crossovers for much of 2019 at this point. Let's now do some 12 grid analysis. Let's start with chart 4E. And with chart 4E, remember that the background colors of these charts will tell you whether we have a bullish or a bearish posture using that market forecast intermediate time line for our posture setting device here. Now note that the VIX, it's been kind of interesting recently. In fact, I've heard David talking about this as well, but with the market doing pretty well recently, hitting all-time highs in some cases, you would assume that the VIX would be lurching down to new multi-month or multi-year lows, and that's not actually what's happening. The VIX has had a little bit of an upward ascent here in the last 2 or 3 days, so keep your eye on it. It's not a big, front of the newspaper headline or anything like that. It's just a little bit peculiar to see that the VIX has shown some resiliency and headed up here in the most recent several days, where the markets themselves have also been going up. And usually that is not the case, right? Usually the VIX and the market work inversely to one another. So just be aware of that. Slight move higher in the VIX here today. Other things to be aware of, I think the key thing that I'm seeing on these charts at least is the dollar. I mean, this has been quite the story here in the last couple of weeks. The dollar just keeps moving higher and higher and higher. We are at not only 3-month highs on the dollar, but we're at yearly highs for the dollar at this point, and we're using UUP as our proxy here. There are different, securities that you could pull up to kind of gauge dollar strength, but that's the one we happen to use here. And that is quite the robust chart. If you look at at the intermediate line, the number itself is listed in the label here. It's at 93 and rising. And that makes it even stronger than the 92 of crude oil. And we've been impressed with crude oil recently as well. But that just goes to show you the dollar has been just an absolute workhorse here recently. So, of course, the dollar does tend to impact things like commodities and foreign securities negatively. And you will see that all three of our commodities that we have on this 12 grid were down today. Gold just barely, but it was in the red. And then agriculture commodities were down 0.43%. And even crude oil had a rare down day, down 1.26%. Remember, crude oil has largely been bucking the trend of that strong dollar for much of this pathway higher due to some of its own geopolitical concerns and some, sanctions against Iran and different things like that affect the crude oil market a little bit differently than just purely reactionary to what's happening with the US dollar. But you will see that ag commodity is worth mentioning here because after looking like it wanted to make a little bit of a rally here in March and early April of this year, it really has turned tail quickly. And we find ourselves now at multi-month lows on ag commodities after having kind of this almost hope that things were going to start working themselves out to the upside. But how quickly things can change. And again, a big reason for that, if you look at this rally, this violent rally higher in the dollar over here, and then compare it to what's going on with ag commodities, they do look exactly opposite from one another here over the last week. So, at some point, if the dollar does start to kind of revert back towards that moving average, I would assume that ag commodities will catch a little bit of a bid higher as well. But at this point, I just don't know how much I would trust any rally I would see out of the agricultural commodities. Let's take a look at our next 12 grid here. Let's take a look at our foreign stock markets 12 grid. And as a reminder, when the US dollar is strong, oftentimes we do see weakness out of foreign securities, at least those foreign securities that we have available to us in the US. I know we do have a global audience here on this particular video, so you guys that are overseas will be looking at different prices based in your own home currency, but the vast majority of our audience is here in the United States where things are priced in US dollars. So that's kind of how we tend to review them here in our analysis as well. And you will notice that many of these foreign markets were down for U.S.-based investors today. You'll notice that Russia was down over 0.5%. You'll notice that China was down over 0.5%. Mexico was actually up, but remember, Mexico had sold off for 4 days in a row after getting that overbought cluster signal. So perhaps just kind of trying to do a little bit of price seeking there with it today, not necessarily anything dramatic. But we did have a few other of those markets down. Germany was down, United Kingdom was down, Israel was down. Now, when we look at these charts, we're kind of looking for interesting setups. One of the things that I would point out is that Russia continues to be of interest to me. Russia, despite falling for the last couple of days here, you'll notice that RSX still is in an uptrend, and it is still above a rising moving average, and it still has a bullish market forecast intermediate posture. So for those of you that are looking for bullish trade setups, I think Russia might be something that you can kind of put on your watch list there to see if it can work out. Some of the other charts are starting to deteriorate a little bit and becoming a bit more concerning. We'll have to see how things shake out. But you'll notice over here, India has been trading below its moving average for the last 4 sessions. And it really hasn't had any snapback attempts to the upside. So that's a little bit concerning because India's kind of been all over the place. It hasn't had kind of smooth trends that we oftentimes try to seek out. This is a violent rally higher that we saw out of India from, mid-February to mid-March. But because it basically went up in a straight line with very little pullback, you really weren't able to take advantage of it easily. Some of you might have been able to latch onto it, but it just wasn't quite as easy as you'll find with some other charts. And now we find ourselves, kind of looking at it as though it's starting to deteriorate. And who knows, maybe we have another violent whipsaw right back to the downside in India. China has been a little bit more consistent with its trend where you have kind of those more obvious, higher highs and higher lows along the way. Right now is a little bit of a breaking point moment for China. At least in this case, we're using FXI. A lot of other ETFs out there might look a little differently, but for FXI specifically, you will see that it is trading below a moving average, not necessarily a sign of strength. But one thing that I will point out is that this is starting to look like a bit of a hammer candle. Let me right click on FXI and go over here to the maximize sell so you guys can see this a little bit better. And it's not that every hammer candle has to work. And by the way, you also need to confirm that hammer candle the next day. So we don't know for sure whether this is going to be an effective hammer candle. But what you're looking for is a candle that looks like this at a support level. Now, it's kind of, debatable whether you would consider this to be a support area or not. Some of you that might look to pursue this bullishly. Others will say, you know what, we're kind of in no man's land right now. I would agree that ideally I'd love to see this hammer candle setting up right on a moving average itself. Right now you can see we've reached that. So then all of a sudden that kind of calls into question whether this is going to be a moving average that's going to start turning around to the downside. But what I will say is that the last couple of times that FXI has traded below that moving average, notice that it also turned yellow right there and yellow right there, just like it is right now, that in each of those attempts, you have had a rally back higher. So, if you're feeling like that's probably going to be the case yet again, then you're happy to see this hammer looking candle here where we have that small head at the top and then this long lower shadow right there. So it's basically telling you that, hey, we had a little bit of a gap down here to start the day. We even pushed lower on an intraday basis, but by the end of the day, market participants push price all the way up to their highest point at that juncture at the end of the day. So while we still closed lower by 0.63% on FXI, it was actually the best outcome that you could have hoped for during that trading day because that was the highest price you achieved. It would look a lot worse if we closed down here at the low point of that candle. Then that candle would look something like that or something like that. But because it looked like the bulls were able to kind of start stealing the ball back away from the bears in the middle of the day and push prices a little bit higher, then perhaps there's a reason to be a little bit more excited than you would otherwise. But for those of you that want to play it a little bit safer, probably makes sense to just watch it from the sidelines right now and see if a bounce does indeed formalize here in China. All right, let's now take a look at our next chart setup. This will be our U.S. sectors 12 grid here. And here things are changing a little bit since I was with you on Tuesday. Remember on Tuesday, we were having that conversation about some of those more defensive areas being the areas of struggle. We were talking about healthcare, we were talking about utilities, and we were talking about real estate. All three of those charts were pink on Tuesday. Today, you'll notice that all three of those charts are back to green. They've largely held up their end of the bargain by rallying higher over the last few days. Healthcare, I pointed out on Tuesday, remember, we were rallying off of that oversold cluster signal, which was the only oversold cluster signal on all 12 of these charts for any of the last 3 months. So it made it kind of rare to see one single sector sell off as violently as healthcare did to produce that oversold cluster signal. We've had a nice snapback rally since then. I still want to be more cautionary around that. That's kind of my mindset. Some of you might see things a little bit differently. Obviously, we're all going to look at things a little bit differently. And the way that I'm kind of looking at healthcare right now is this was a pretty substantial support break that took place here. I'm not surprised at all to see a rally. After all, that's kind of what the expectations can be when you get an oversold cluster. So this is not surprising to me, but what I want to be cautious around is the fact that we now have a falling moving average. And so if XLV and healthcare stocks in general have a few more days to the upside, and then they start testing that downward trending moving average and look like they're going to use that as a bounce back lower, I do think that you can use healthcare-oriented stocks as potential bearish trade setups at that time. Right now, it's a little bit early, but just to kind of start prepping your mind in advance of some potential trade setups a few days down the road, that's maybe what you can look for. Some of these other areas, utilities have been rather impressive here the last 3 days, up all 3 of those days, and now we're back up above that moving average. So now the question will be, can we hold those levels or not? Real estate's not quite there. Now, real estate held up better than utilities in the weeks prior, but right now, in the most recent move up, we haven't been able to surge up quite as much as the utilities either. Right now, we're still below that moving average. Some of the other things to be aware of, Communications had a really stellar day. Notice that XLC was up over 1%, so that was actually our best performing sector today. And that goes back to what I mentioned before. Facebook was an absolute workhorse today. Facebook, remember, used to belong to the technology area, but now is part of that new communications sector. So I have a feeling that Facebook is a large reason that communications led the way higher here today. The two areas that now are deemed to be bearish posture, according to the market forecast intermediate line, are materials and energy, but they're both at critical junctures right now. Notice that materials is basically sitting right on top of that moving average, and then the energy world is just a hair above that moving average. So that's a good sign that they didn't breach those moving averages yet. But remember, if we have some sort of a sell-off day here for the rest of this week or early next week or what have you, since they're already so close to those moving averages, they might kind of give up the ghost and have a little bit of downtime. And remember, those would be considered risk-on types of sectors. So it's not necessarily a good sign for the health of the overall market if we're seeing things like utilities rallying back higher and things like materials and energy stocks starting to sell off. So I do want to keep those kind of off to the side for now and put a pin in them and watch them for the next few days. Real quick over here on the internet, thank you to everybody who does click like on Twitter and on Facebook and other areas on social media. So thank you to the 87 of you that did that last time for me. Generally speaking, I'd love to get that number up to 100. So if you're not somebody who regularly does that every single day for David and I, and you're getting value out of watching these videos every day, we would encourage you to do that. Obviously, it's free to do that, and it's a way for you to vote and have your vote be sent to David and I that you want to see these free videos continued. Also wanted to point out that David will be teaching his popular technical analysis trading room tomorrow at 11 a.m. Eastern time for those of you that are premium market scholars. Then he has his Q&A session on Saturday. Remember, Thursdays is the day when I teach my Q&A session. I've already posted that recording. Sometimes those recordings don't come out right away, but today WebEx was nice to me, and so I've got that recording posted for those of you that want some insight. My class was 2.5 hours today, and we talked about things like 3M. We talked about things like Sunoco. We talked about MetLife. We talked about Bristol Myers Squibb. We talked about CVS. We talked about Amazon. We talked about GWW, which is Grainger. And we talked about UPS. So for any of you that are premium market scholars and you're interested in those companies and you're interested in my take on those companies, feel free to check out that recording that is now available to you. All right, let's get back over here to the charts, talk about our trade application example for the day. All right, I'm going to pull up, in this case, chart 3A for those of you that are premium market scholars following along at home. This is our dividend stair-step chart that I tend to use in my Tuesday dividend growth investing trading room. And so I'm going to pull up ticker symbol 3M. Talked about it earlier. This was one of the stories of the day. 3M came out and really disappointed people. It was the worst day that 3M stock has had, a one-day drop since 1987. So, think about that from a contextual perspective. If we're going through 2008 and 2009 and saying that this is the worst day since all the way back to 1987, that is pretty darn extreme. Now, 3M, as you can see, has been a strong stock over the last 10 years. Who knows, maybe things will start changing here, but generally speaking, it has done a decent job for long-term investors. As a reminder, 3M is not only a dividend aristocrat, it's actually a dividend king. In other words, it's raised its dividends for more than 50 years in a row. Their exact number is 61 years in a row. So it is an elite dividend raising company. Now, just because it's an elite dividend raising company doesn't mean it's always attractive to purchase for long-term investment. You want to try to take advantage of elite companies when they are at elite prices. In other words, for long-term investors, that's when prices are down, not up, because when prices are down, dividend yields are higher. And you'll notice that I've got this dividend stair-step chart pulled up in front of us where you see kind of this orange line that's kind of stair-stepping its way higher. That is what we refer to here at Market Scholars as our average high yield level. And for 3M, that average high yield is when it has a yield of 3.01%. And so you can ask yourself, as you look at this chart, would have it been in your best interest to establish a bullish position when 3M was at or below the orange line. And let me do this real quick too. Just notice that those bubbles are kind of blocking our view on this one. There we go. So you can kind of see that 3M has really only had 6 instances in the last decade where it was trading with a 3.01% yield or higher. And right now is the 7th time. It's at a yield of 3.02%. You can see the first instance of it was back here. You had another instance of it right here. And this would have been back in 2010 on this one. You had it again briefly in 2011. And then you would have had to go all the way here to 2015. And then early 2016, and then late last year on Christmas Eve, you also had that opportunity. So that makes this one the 7th time in the last decade where you've had that opportunity to buy 3M with a 3% yield. Now, some of you might decide to go out there and just buy the stock outright, and that would be fine. In fact, I'm pretty sure this account has a position in 3M. It does. We have 73 shares, and we purchased this way back on August 24th of 2015 at $136.56. And of course, that was us abiding by this stair step. That was right on this particular candle right there when it was touching this orange line. But obviously, you guys weren't all around at that time or trading at that time, so you might not have had that opportunity. So if you are interested in a company like a 3M, generally speaking, you're better off from a long-term perspective if you're establishing your position when it has sold off in price, its valuations have become more reasonable, and its dividend yield is more impressive. And now is one of those opportunities. What I'm going to do is actually sell a put. Since we already own shares in this particular account, I'm going to sell a put on 3M. And the other thing that I would mention is today is only day one in the pullback. Oftentimes, stocks don't immediately stop going down after just one day after a reaction. Some of you have heard of like the 3-day rule where you kind of just let it breathe for a while. So this is not me saying that it can't go down anymore. This is me saying this seems to be a reasonable place to be selling a put if you're hoping to accomplish the task of buying a high quality company at a level that historically has been attractive, which in this case is a 3% yield or more. So for that, let me go on over here to the trade tab, and I'm going to look at the let's do the June contracts here with 57 days until expiration, the monthly contracts. And I'm going to look for a return on risk that is 1% or more. In this case, that points us to the $180 strike. So what we would be doing if we're selling a put is committing ourselves to buying 100 shares. Now keep that in mind. This is a more expensive price stock. So for some of you, this might not be the right trade because this is going to have to set aside about $18,000 to be willing to buy 100 shares of stock if it comes to it. Now, how that would happen is if the stock price would fall from $190 down to below 180, we would be committing ourselves to buying it at 180. Now, in return for our willingness to commit our capital at that price, we receive money up front. In this case, you can see that the last traded price for the 180 strike was about $2.67. So that's $267 that would go into our pocket immediately when we initiate this trade for our willingness to be willing to buy 100 shares of 3M at $180 in 57 days when the June contracts expire. So in order to implement that trade, simply click on the bid price. Again, I'm just going to do one contract and make it nice and easy here. And then I will try to put this in at $2.67. Again, that's where the last traded price was. I will put this in as a good till cancel order as well, since I've got 57 days left until it expires. And that way, if it doesn't get filled tomorrow, maybe it'll get filled the day after or early next week. So go ahead and click confirm and send. Review this one last time. There's the $267 I'm taking in immediately. And then I am committing myself to being willing to buy this for $180 in June. Send that off and we'll see if we can get filled. All right, thank you for joining me here today. Earnings season has been quite interesting. It's always fun, at least for me, to see what stocks are popping, what stocks are dropping. And by the way, remember I do put together that 9 at 9 graphic on Twitter every single morning at 9 a.m. Eastern Time if you're ever interested in which stocks will be up or down big for that day. So of course today we saw 3M and Facebook on that graphic. Tomorrow we'll probably see Intel show up on that graphic. So if you are interested in those stocks that are moving big time, make sure you checking my Twitter feed at 9 a.m. Eastern time every trading day. But do want to wish you all the best of success with your trades and your investments. David will be back with you tomorrow, and then I'll see y'all next week. Take care, everybody. Bye-bye.